Hi and welcome. You're watching Weekends with Ventura. I'm Vidata, and today we are going to talk about an extremely important topic. In last 2 months, Nifty 50 has rallied 30%, but guess what? Nifty Pharma is up as much as 54%. And many investors are now wondering if pharma is going to outperform, then why not invest in pharma? If you are also curious to know how the markets are going to perform, how the pharma is going to perform, then you must watch this video until the end. Because today we have with us a special guest, Mr. Juzer Gabajiwala. As you know him very well, he is the director at Ventura Securities. So let's welcome him and ask him some questions so that at the end of this video, you would know whether or not you should invest in uh, pharma sector. So, hi sir, how are you doing?
Hi Vidata, how are you?
Yeah, I'm fine, sir. So, what's happening, sir, in the pharma sector? Because suddenly it looks like it's become a very hot sector.
Yes, so I think we need to also understand it from a perspective. At
Mhm.
first, we need to understand a little bit of the pharma industry. So, yeah, Indian pharma companies nearly supply nearly 50% of the vaccines in the world. Now we have a nearly
Yeah,
20% global share.
correct.
We used to supply nearly 40% of generics to US, which is now down to around 35%. Right?
Yeah,
And the last 5 years has seen a lot of headwinds against on the pharma side,
correct.
mainly due to the domestic, where the pricing policy of essential drugs had been controlled. We had a lot of FDA audits, which also had an impact on most of the pharma companies. So,
Correct.
last 5 years, we have seen extremely muted growth on the pharma side.
Yeah,
The positive has been that last 1 or 2 years, now pharma companies are showing some good return, sales growth. So the US side, there's a nearly around 8% growth. Domestic is also now showing a nearly double digit. It's a low double digit, but it's a double
correct.
digit growth.
Yeah.
And specifically where we are in this unprecedented COVID-19 scenario,
Hmm.
that will should play out positively for this industry, as now you'll have a lot of health consciousness across.
Yeah, sure.
So I think that will act as one positive factor.
Yeah.
Secondly, valuations are also reasonably attractive even still.
Hmm.
That's the second point. Third,
Correct.
since we are majorly dependent on exports, on
Yeah.
a lot of exports, the
Hmm.
rupee depreciation has also helped
Helping. Yeah.
in their
Hmm.
realization.
Hmm.
Another thing is that biotech also continues to grow.
Correct.
Even prior to this, there was a government focus was there on the healthcare. So you had the Ayushman Bharat scheme,
Correct.
and I think now there'll be much more renewed focus
Hmm.
on the health sector.
Yeah.
Uh, Even the COVID-19 scenario would also mean that it would have an impact on the unorganized sector. So you would
Yeah.
find that a lot of things moving from the unorganized to the organized
Hmm.
segment.
Hmm.
So I think all in all, again, and it's a defensive sector,
Yeah.
so not very aggressive. Uh,
Hmm.
all in all, it looks like that some good times are there ahead for the
Yeah.
pharma.
Yeah. So pharma resurgence, in other words, is quite evident, and valuation were in a comfortable zone for this rally to happen. So at this point of time, I would like to ask you, sir, suppose somebody wants to invest. Now somebody is uh, reasonably sure that pharma sector has better days ahead. So would you advise investing in stocks, or do you think it's better to be with mutual funds because the professional manager is handling your money?
Yeah, so this is a good question. I think first of all, you need to understand that a single stock return can
Mhm.
never compare to a mutual fund return. So
Correct.
what you gain in one stock, you cannot compare with the whole basket. So
Understood.
that's the
Correct.
first thing which you need to look at. So if
Mhm,
you find that you are very clear that you feel that this is the stock which
mhm,
is going to do well,
mhm.
and you are clearly about what you want to do, and or whether it is one stock or whether it is three four stocks, and you are sure that these are the only stocks you want to buy,
Mhm, mhm.
then it would make sense that you look at the stock.
Correct.
But if you are not very clear, if it is not something which you're going to be able to track on a regular basis,
Mhm.
then it would make sense that you look at a fund, because you feel that the whole pharma sector is going to do well. Now,
Correct.
uh, pharma has now got an extended terminology, because we'll call it healthcare, right?
Healthcare. Yeah.
So, because now you have got even diagnostic companies
Mhm, mhm.
part of that, and you need to understand that even health insurance company
Yeah.
is also part of the healthcare.
Even hospitals are listed nowadays.
Hospitals also there, and so if you see, there are nearly around 200 plus companies which are in the
Mhm.
uh, pharma space, right?
Correct.
So which one to select? If you have clarity
Yeah.
for the company and prospects, makes
Mhm,
sense. If you don't have clarity,
mhm.
then it makes sense that you go through the mutual fund route.
Yeah.
And another advantage which you have over a mutual fund route is that
Mhm.
if you even though if you have exhausted your funds into
Yeah.
a particular stock,
Mhm.
and if the stock has gone down and you would like to buy, but you
Correct.
don't have the adequate resources,
Correct.
mutual fund always has adequate resources,
Yeah.
because there are always somebody else who's investing, and
Yeah.
they always would have money to buy some stock which is good, or sell off which is not good.
Yeah.
So
Correct.
it's all individual choices. So this is
Mhm.
what I would suggest.
Correct. Correct. But as you rightly pointed out, sir, because mutual funds are nothing but the basket of stocks, but they have also run up quite a lot in last 1 or 2 months. So do you expect them to continue their performance even going forward? Is there any space left? Basically, I
So,
need to understand.
so I think what you need to look at is that the total size. So even today, I mean, even after it being run up, so I'll just give you some numbers. The
Yeah.
assets under management of pharma funds. I mean, first of all, there are only 8 pharma funds
Correct.
in the entire space, so there are not very many players.
Mm-hmm, mm-hmm.
The 8 funds, uh, there some of them would have come up lately. For March
Correct.
19, the AUM was somewhere around 6,800 odd crores.
Okay.
In March, it was nearly around 5,500 crores. So it has come down.
Oh, yeah.
And now, in as of May, it is nearly
Mhm.
around 7,700 crores. So
Okay.
they have also run up quite a bit.
Yeah.
But when you look at now, what are you comparing this with? Okay.
Mm-hmm,
Entire market cap
mm-hmm,
of healthcare,
mm-hmm,
like there are around 213 stocks. The market cap uh,
mm-hmm.
uh, in March 20 was
Okay.
around 6,82,000 crores,
Okay. Mm-hmm.
which is now today around 8,82,000 crores, because it is run up, plus some people would have invested the money.
Yeah.
That is, in fact, even Reliance Industries
Mm-hmm.
more valuable than the entire funds
Oh,
everything put together, right?
interesting to know.
Right? And so, out of 8,82,000 crore,
Mm-hmm.
7,700 crore is the mutual fund segment. So we
Correct.
are talking about just the 1%, less than a percentage share
Yeah.
of the entire market cap.
Yeah. Yeah.
So I think there is scope. I mean, for them to invest further.
Definitely. And if people are going to see money on the table, and if pharma sector is going to perform well, they'll definitely be inclined to put more money in the
Yeah,
sector.
and when you're talking of returns,
Mm-hmm.
so surprisingly, I mean, the 1 year returns, if you look
Mm-hmm.
at, I mean, we just some back calculations.
Mm-hmm.
So as on Feb, 1 year return was around 9.5%.
February. Okay.
February, okay, and when we take 1 year return as of today, it
Mhm.
has jumped to 35%.
Oh, I see.
But if I look at a 5 year return today,
Mm-hmm.
it is still 4.5%.
Oh, so from a
Okay,
consolidation phase, now the sector has started getting a
Correct. So, I mean, even so, a person who's invested for 5 years would still be saying that I still have just a 4.5% return on
correct, correct.
I mean, which is less than even the FD rate.
FD rate. Point taken. So now the moot question is, sir, and I am sure many viewers might be inclined to ask this question: how to select a good pharma fund?
So, I mean, first of all, one good advantage you have is that the choice is restricted to eight. It is not that you have to have too many funds in that. Right? So you need to see. Each fund would have a different way of operating. I think the first criteria you need to look at what are the size of the fund. So
Okay.
be comfortable with the size of the fund. Whether it is too large, you may not want to get in. Whether it is too small, you may not want to get in.
Correct.
All
Correct.
which you need to decide. So that's the first part. The second is that what is the longevity of the fund manager in managing that fund. Right?
Correct.
So the longer there is a single fund manager, then there is at least the thought process would remain more or less the same.
Yeah. Correct.
Look at the longevity of the fund manager. If there are a lot of changes, then your portfolio could undergo a change based on the fund manager view.
Correct.
The another thing what you should look at, in my opinion, is also in which market cap space the fund is investing more. Okay.
Yeah.
So if you feel that you want to be conservative, then go for somebody who's got more large cap orientation.
Correct. Correct.
You want to be, because as it is, you need to understand that being a sectoral fund, you're being aggressive.
Correct.
You're just into a sector fund. If you feel that you still want to be aggressive, then you can have somebody who's got more exposure towards the mid cap and the small cap. Okay, so you can look at even the market cap. You can look at how he has performed over longer periods of time. How has he performed vis-a-vis the benchmark? See the fund manager, and based on that, these are the 3-4 parameters which you should look at, and I think it should do you good.
Yeah, perfect. So now, suppose I want to invest in a pharma fund. I would be puzzled about whether I should put everything at one go or I should go SIP route. What would be your advice?
See, the moment when something is run up so fast, right? Then it always, there could always be a correction. I'm not here to predict the market. Okay, I can't predict what is going to happen, where how the COVID scenario is going to play out. So with all these things in mind, I think even if you have lump sum money, you need to spread it out over the period of next 6 to 9 months.
Correct. Correct.
And always said, SIP is always a best way. And most important thing is also have at least a 4 to 5 year time horizon.
Okay.
In terms of your investment over here, means you cannot expect something where it will give you, overnight results.
Yeah, correct. And finally, I would like to know, in terms of percentage of portfolio, how much should go in pharma sector?
So, you should look at it from an equity portfolio itself only, not your overall portfolio.
Correct.
So, you should look at maybe around 5 to 10% of the equity portfolio. That's, I think, reasonable exposure. You're getting a whole basket of pharma. So, not more than 5 to 10%. You can allocate towards your equity portfolio.
Yeah, towards pharma funds towards equity portfolio.
And the thing is that it is at least a little bit more defensive than the other sectors.
Correct. And as you rightly pointed out, this being a sector fund, you are already aggressive. Even it's a defensive sector, you are already aggressive. So 5 to 10% max.
So you can say that the health can be the new wealth.
Yeah, health can be a new. Perfect. It was really pleasure speaking to you, sir, as usual and as always. And we'd like to see you many more times on our show. And investors are also definitely looking to take some insights and advice from you. So thank you very much for joining us.
Thank you, Vedant.
Thank you. So viewers, I'm sure you must have had really a good session, and definitely you have a key takeaways. So health is going to be the new wealth. So if you are going to invest in pharma funds, spread it across, spread it over at least 9 to 12 months. He said 6 to 9 months, but if you want to be ultra conservative, you can spread it over a year. And then depending on your risk appetite, you can decide whether you want to be with a large cap oriented pharma fund or small cap or mid cap oriented pharma fund. It's your call depending on your risk appetite. Hope you enjoyed. See you next time, next week. Bye.
Investment in securities market is subject to market risk. Please read the offer documents carefully before investing. We Ventura Securities Ltd, its analysts and associates, with regard to the video, hereby solemnly declare and disclose that we do not have any financial interest of any nature in the company. We do not individually or collectively hold 1% or more of the securities of the company. We do not have any other material conflict of interest in the company. We do not act as a market maker in the securities of the company. We do not have any directorship or other material relationships with the company. We do not have any personal interest in the securities of the company. We do not have any past significant relationships with the company, such as investment banking or other advisory assignments or intermediary relationships. We are not responsible for the risk associated with the investment, disinvestment decision made on the basis of this video.